Welcome to our weekly Forex forecast, and this is for trading for the week of September 28th to October the 2nd. Just a quick disclaimer here before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. As usual, we'll start off by taking a look at our calendar here. All right, so starting the week off here, we have ECB, President Lagarde speaking. Other than that, Monday, not a whole lot. We do have FOMC members, Bank of Japan. So we have central bankers, but it's not, well, except for this one here. But we have heard from the central bankers recently. So if there are no surprises, I wouldn't expect too much of an impact here. But do keep in mind in regards to ECB and also Bank of England. So Brexit situation is going to have an impact on the market. So we do have to keep that in view. And as we get closer to the Brexit time, expect more volatility in, especially in the pound, but euro will also get impacted by that. So anytime we hear about EU and UK actually reaching an agreement or moving towards an agreement, any positive developments will be good for British pound, and vice versa. Anything that tells us that they're not close to an agreement or not coming to terms, all of that would be negative for the pound. And also, now we are going into October here. As we get closer to the US elections, expect more volatility in the market. So we have seen the stock market has been sideways over the last little while here, or it's dropped a bit as well, I should say. So that has to do with the upcoming election. So the upcoming elections, because of everything that's going on currently, the elections will be very impactful. So the US elections are impactful regardless, but this time we don't see who the clear winner will be. Right now, everything is up in the air, and as we get closer to the elections day, we are basically from here on out expect volatility in the market if the market participants or investors are concerned. So let's say Biden is leading and continues to lead as we go into the elections, that will have a negative impact on the markets because of Democratic some of the policies that or Democratic policies, I should say, the markets don't like them as much, whereas some of the Republican policies are considered good for the market because they promote like tax cuts and stuff like that that support the big businesses, and everything that we have on the stock market is big business, whereas Democrats tend to be more for the normal lay person, but not so much for the big businesses. So that's why there tends to be there tends to be a lot of this, concern in the market, and we're likely to see that now that we have seen the market go up so much. We are likely to see some of that pullback as we get closer to the elections because of the uncertainty. Markets don't like uncertainty, but once we have a clear winner, which again will be likely a contested thing because President Trump is already talking about how the results may not be honest for the election. So we'll see how all of that plays out. But I think just expect volatility because there will be drama. Let's put it that way. So I think this will be a highly fought and a tight race coming into the elections. So just watch out for that. Now, other than that, another thing that we are seeing in the markets currently is the package, the stimulus package. So the stimulus package in the US was supposed to be released prior to them breaking for summer in August. That didn't happen. And now they've been talking about passing a $2 trillion stimulus package. Stimulus packages are good for the stock market because that means there's more money in the pockets of businesses. Now, there will be some money that will be allocated to individuals as well. So all in all, anytime there is a talk of stimulus package, it is good for the stock market, and it is bad for it will be bad for the US dollar, because when we are creating so much supply of money in the market, the currency value drops. So watch out for that. Any sort of positive comments in regards to coming to an agreement in terms of the stimulus package will be good for the stock market, but not so good for the US dollar. So they will have a direct impact on our trading. So we'll have to keep a close eye on the developments around the stimulus package. All right, so back into our news here. On Tuesday here, we have a ton of Fed members speaking. So this can have or is likely to have an impact on the markets. If you're trading the US dollar on Tuesday here, keep an eye on these things, because any sort of comments in regards to further stimulus measures will be positive for the stock market and negative for the US dollar. So expect volatility in the US dollar as a result of that. On Wednesday here, again, we have ECB. Here, not a ton in terms of the major news, but we do have the, excuse me, the payroll numbers. So, and then we see this here is, sorry, we have ADP non-farm payroll numbers here. The employment numbers do have an impact on the market if the employment numbers are good. So ADP tends to be a precursor for our non-farm payroll that comes on Friday. This here, the non-farm payroll, is a market moving event, but generally we see ADP tends to have an impact on the market because it's a precursor to the non-farm payroll. So if these numbers come in better than expected, that shows that the economy is recovering now that we are kind of hopefully towards the tail end of the virus here. We are like any type of positive numbers, any type of positive data is good for the stock market. It shows that yes, things are progressing, which is a positive thing. So that would be good for the stock market. And generally when money is flowing from the US dollar into the stock market, the US dollar tends to drop during that. We also have GDP numbers again for the US, as well as these PMI numbers, as well as the pending home sales. So generally when we have seen so right now, there's a lot of deferrals in terms of the mortgage payments. And if the sales activity in terms of homes slows down, that means we are basically looking for trouble in the near future. So positive numbers here will be good to see, and they will have a positive impact on the market and vice versa. So again, tons of FOMC members this week. Last week we had the same thing. We saw Powell was speaking on multiple days. So when we have this much activity, we just have to keep an eye on our news feed as to what they're saying, because things will change based on the comments here. And then on Thursday here, tons of PMI numbers here for Euro. The PMI numbers are precursors to retail sales. And so these PMI numbers are important. Like I said, they're leading indicators in terms of fundamentals, because if PMI numbers come in good, then we are expecting retail sales and GDP to be in line with those as well. With the economy opening up around the world, so these numbers should be positive. If we see a negative or a drop in these numbers, I should say, that will be negative for the euro, because that will say that the economy actually is not resilient and the recovery may not be as good. So positive numbers here will be positive for the euro. We also have core spending numbers, PMI numbers here from the US. So same thing, if the numbers are positive, this will be good for the US dollar. And then the main event really this year, this week, is our, what do you call it? Sorry, non-farm payroll here. Non-farm payroll, again, this is a major event. It is always market moving. So if you are trading the US dollar, expect movement or volatility when you're trading. All right, so, and then let's take a look at our charts now. Okay, so Euro US dollar, we'll start off with Euro as usual here. We see Euro has dropped here last week. US dollar was strong. We saw this is the first time in weeks that we have actually seen a real bearish candle here, strong bearish candle for Euro. So this is looking bearish. But now, because we have had such a drop, I would look for a potential pullback here before we see another move to the downside. So I would be looking for a pullback either into this 1.1700 level, or we could get a pullback all the way into the bottom of this range that the price was trading in. So we may get a move like that. But overall, bias is bearish. Watch out for that pullback, but looking bearish right now. First target here is 1.1575, and then we're looking at 1.1500. So bearish bias here for euro dollar. Pound dollar here, this one's looking bearish as well. We see this one did do a pullback here. And we see the confirmation. So this is what I was talking about for euro as well. So we saw this big drop, then a pullback, and now we got that bearish candle. So I would be looking for a follow through here. So bias for pound dollar, sorry, is bearish. In terms of a pullback, I would look at this 1.2820 level, and then I'm looking for a follow through. So in this case, the target here, the first target would be into 1.2520, and then if it continues lower, we have 1.2400. So bearish bias here for pound dollar. Aussie dollar here, big drop here, same thing. I would look for a pullback. So in this case, I'd be looking for a pullback into 0.7080. Or looking for a pullback into 0.7175. So bias here is bearish for Aussie dollar as well. And in terms of targets, I would look at 0.6950 and then 0.6900. New Zealand dollar here, same thing. We see, or we saw that price ran into this resistance level, which we had talked about last week, and a nice drop. Now, keep in mind, this is right into the support. This is an important support resistance level. So for price to continue, we do need to see a drop through this. So I'd be looking for a pullback, potentially into this 0.6620 level. And then if it holds below here, we'd be looking for a drop. Now, sometimes what can happen is we may get a pullback, slightly deeper pullback here. So in this case, we could see price go into pull back into this area here and do a bit of a head and shoulders. So just keep an eye on the pullback area here, but bias is bearish, and targets, we are looking at 0.6380 as the target. So bearish bias for New Zealand dollar as well. Dollar CAD here looking bullish here. It is into resistance here, so just watch out for that, but it is bullish. And next level to watch here would be 1.3520, and then above that we have 1.36. So just keep in mind, everything right now looks bullish for the US dollar. But if that stimulus package gets passed, or we hear comments that things are getting close, or in terms of passing that stimulus package, US dollar will be negatively impacted. So this is an inverse relationship between the supply of money and the currency strength. So all of this, the US dollar crosses, can turn as a result of that. But for now, just based on the technicals that we have in front of us, this looks bullish. We may get a pullback into 1.3320, or even into 1.3280, and then we're looking for a further move to the upside. So this is a nice strong bullish engulfing candle here, so bias here is bullish. Euro pound here had a big move to the upside, and now we have a bearish pin bar here. One thing to keep in mind, it's right into support. So we do need to see a break through this level for it to continue. But this is the type of move that I would be looking for here. So we have a large inefficient move here, which could get filled. So kind of similar to this move here. So we saw this move to the upside and then it got reversed. So we may see something similar here as well. So bearish bias pullback, I would look for 0.9160. First target would be 0.9080 and then 0.9040. Euro Swiss franc here. This is still looking sideways here. We do see a bit of this move to the upside here. So it seems to be doing this. So we do have a bullish candle close. I'm looking for price to basically go into this resistance level here, right into the top of the range, and then potentially even go test this 1.080 level. So for now, bias is neutral to bullish because we're looking for a move towards the top of the range. So first target 1.0850, then 1.0885. So bullish bias here, but watch out for this type of a move because this is what price has been doing over last several weeks, and we can get something similar here as well. So for now, neutral to bullish bias here, aiming towards the top of the range. Pound Swiss franc here, this one is looking bullish. We see price came into the support here. We do have a bullish pin bar. Now, keep in mind, again, this is into resistance here, and any news in regards to the Brexit negotiations not progressing properly, then that would be bad for British pound, which means pound can turn around once again. All right, so bias here is bullish. Just keep the resistance in mind. However, we may see a move like this. So bias is bullish here, and target 1.1950 and then 1.2020. So bullish bias for pound Swiss franc. Watch out for this resistance though. Dollar Swiss franc, a huge move to the upside here, looking bullish still. And in terms of pullback, I would look at 0.9235 area and then looking for a further move to the upside here again. But keep in mind those things that we already discussed in regards to US dollar strength. Things can change. So I'm looking for a pullback either like this or a shallower one and then a further move to the upside. Target here, first one 0.9320, then second 0.9370. So dollar Swiss franc is bullish. Yen crosses. Yen crosses will be interesting because as the market is impacted, as the stock market is impacted, our yen crosses will get impacted right with the stock market. So if the stock market starts to go up, our yen crosses will go up as well. So watch out for that interrelationship. All the stimulus talk, any positive stimulus talk will be bullish for the yen crosses. So right now for pound yen, this is looking neutral. There is bearishness in this candle. However, we see that price rejected the low here, and we have a large pin to the downside, which means we may get another pullback or a retest even of the low, but if it doesn't break, we are going back up again. So that's something to watch out for. Right now, bias is neutral here, and we may get this sideways move here. But if the stock market starts to take off, then I would look for this move higher, and we'll watch that on the daily charts. Euro yen here, this one is looking bearish still, and next target here is 122, and then below that we are looking at 121.00. So this one is bearish as well. In terms of pullback, I would look at 123.20 here, back into this area. So this is a strong support resistance area, and generally they tend to act like pullback area. So this is the type of move I would look for here. So bearish bias here for euro yen. Dollar yen, this one has turned around. So like I said, US dollar has been quite strong lately. With this one here, looking bullish at the moment. So look out for this pullback, and then this is what I'm looking for. Overall, though, keep in mind, we still have that bearish trend. So what could happen is one of these. And again, we'll watch this on the daily, but don't forget about this downtrend here, or I should say the trend line, because it can turn around from here. So for now, neutral to bullish for dollar yen. Aussie yen here, nice drop. So one thing to keep in mind with Australian dollar, when the stock market goes up, Australian dollar, New Zealand dollar tend to go up with the stock market. So that positive stimulus package talk will have a positive impact on Australian dollar. And if it doesn't go through, if there are too many hurdles, that will be negative for Australian dollar. So as we go into the elections, any sort of concern in the market, any sort of uncertainty in the market that causes the stock market to drop will have a negative impact on Aussie as well. Okay, so this is also looking bearish here. And with this one, I am looking for a pullback like that and then a drop. So bearish bias here for Aussie yen. Okay, New Zealand dollar here, this is also looking bearish here. And with this one, just to keep in mind, we are still in a range here. Price is stuck in a range, and that's the top, and here we are in the bottom. So there's this closer range here, and then the outside range. So right now it's still in the range, and this is what I would look for first. So bearish bias, watch out for support. If it doesn't go through, it's going back, just like it turned around here. So that would be the caution. And then once we do see it clear this, there's support right there. And that this is a strong support as well. So we'll have to see a clear, once it goes through though, there's all this room for a move to the downside, but expect some struggle here. So bearish bias, first target will be 0.6815 and then 68.15, then 67.00. So bearish bias for New Zealand yen. CAD yen here, this one's neutral. So with oil, if oil goes up, Canadian dollar goes up as well. So this one is impacted by more items. Right now, so neutral to bearish will be the bias. Now we may get either a move like this, or it may just go up and then it may turn around from there. So this is neutral to bearish, still bearishness in there. But if it doesn't break the support, I would look for price basically going back up. For now, neutral to bearish. Once it goes through the support, next target will be 77.50 and then potentially 76.80. Again, we'll watch that on the daily. All right, let's take a look at commodities here. A big drop in silver here. We see price just took off to the downside. Now, this is not a done deal here. If we see that the stock market starts to go up, I would expect this one to go up as well. For now, though, bias is bearish, just purely based on technicals. But stimulus package will play a major role. This is what I'm looking for currently, a potential pullback towards 24, and then a move back down towards 21.65 and 21.20. So this is looking bearish right now. Gold, same thing here. We had talked about this triangle formation here. We see price has dropped through that. So this is looking bearish at the moment. In terms of pullback, I will look at 1882 as a potential pullback level. So something like that, or we may get a deeper pullback towards this 1900 level. So either one of those levels could be retested, but bearish bias, again, if the stock market starts going up, even though traditionally there's an inverse relationship between gold and stock market, but right now all these asset classes are moving in lockstep. So we are likely to see this go as well, because it's the relationship with the US dollar. They're all priced in US dollars. So when US dollar drops, these go up. So the stimulus package going through will cause the US dollar to drop, which means anything that's priced in US dollar will go up, including gold and silver. All right, oil here. Oil is interesting. We see price came into support. So this looks more like a pullback. Now, if it continues to hold above this 39 level, then we are likely to see the price go higher. So the test here will be the support level at 39. If it holds, we're looking for a move back towards this top of this range. As we can see, price has been trading in this range. It's right in the middle of the range right now, so we have to watch for it. Now, should it go through this, then we're looking for a move to the downside. So for now, I'm neutral on this. We'll see how this plays out. 39 is the level to watch, and we'll just keep an eye on it. All right, copper here. Copper is looking bearish. So again, it is into support. So with this one, this is the move I would look for, a pullback potentially into 2.97. And if it holds, we're looking for a drop into 2.87 and then 2.84. So bias here is bearish. Bitcoin here, Bitcoin's been back and forth. Again, this one, just like oil, we see price has held above. So if it holds above this 10,000 level, we're basically looking for a move higher here. Now, I don't have the weekend numbers on this chart because my broker is closed right now. So the weekend numbers won't get updated till the market opens in a little bit here. But for now, and this is again in the middle of the range. This is neutral. So I would look for a bit of a, there's bearishness in this candle, but we also see rejection from the support. So price can go higher. So bias here is neutral for Bitcoin. All right, let's take a look at the stock market here, starting off with S&P 500. So we see on Friday here, price moved up. And the reason for that was all this talk about $2 trillion in stimulus package. Stock markets love the stimulus package because it's more money in the business pockets. And technically, the way it's supposed to work, doesn't always work this way. The way it's supposed to work is that if businesses have more money in their pockets, they will hire more people, they will make more investments in the business and so forth. Now, the reality is we have seen the opposite behavior when, so I won't go into that, but regardless of that, the relationship is that more money, stimulus is good for businesses, so it's good for the stock market. So right now I'm neutral on this. There is bearishness in this, and I would actually expect going into the elections, I would expect the market to be more bearish than bullish because of the uncertainty. So having said that, though, stimulus is a positive thing for the stock market, and it is likely to make it move higher. So in this case, I am more neutral right now. So we'll have to wait and see how big the stimulus package will actually be and when it gets announced and what's actually in the package. So we may get a move like that. So we may see a drop into this 3265-ish level or 3250. And if it holds, we may see a move back towards there, towards 3380. And we may even see a neutral kind of sideways move. So we'll keep an eye on it. Right now, I am neutral. This is not looking totally bearish, but it's not looking bullish yet either. So neutral bias here for S&P 500. Nasdaq here. Now, Nasdaq did recover. So all this talk about stimulus, again, bullish for the market. Now, it is into resistance. as we can see. So if it doesn't go through, we can still see this sideways move. So right now with this one here, bias is neutral to bullish, and concern will be this 11,250 level. So if it doesn't go through 11,250, I will look for a sideways move. But for now, neutral to bullish for Nasdaq, and target will be 11,560. Dow Jones here, a nice drop in the market, but again, we see a large pin in the bottom, which shows rejection. So with this one here, again, I will look for a bit of a pullback into this pin, and then if it holds, we're looking for a move higher. Keep an eye on that stimulus talks, and we'll just have to see how all of that plays out. So neutral bias for Dow Jones. DAX here, this one has dropped. Now we are into support, so something to watch out for. In terms of pullback, I will look at 12,600 level or even 12,720 level here, and then we may see a drop. So bearish bias here for DAX. But the markets do tend to follow each other. So if the US stock market starts going up, I would expect these stock markets to react in a similar way, even though stimulus package doesn't have anything to do with European market, but they do tend to, the positive feeling or sentiment tends to go across the board. So right now, this one is looking bearish. Notice that we are into support. Last time we had a nice bearish candle close, but it couldn't go through the support and had turned around. So similar thing this time, if price does not go through, we are looking for a reversal here. So right now, bias is neutral to bearish here. If it doesn't go through, that's going to turn. So neutral to bearish for FTSE. And then we have our Nikkei here. Nikkei did bounce off. So we have a big pin in the bottom. We have a bullish pin bar actually. So bias is bullish, but we had a bullish pin bar here as well, and then price got stuck into the top of the range. So right now, first target would be the top of the range at 23,600. If it doesn't, then we are back again into the range. So over the last several weeks, as we can see, price has been stuck in this range. It hasn't been able to break through the support, but now we are headed towards the resistance. So if it doesn't go through, we are basically back into the range and looking for a sideways. So right now, neutral to bullish for Nikkei as well. All right, so that's it. There is a question or a couple of questions here. All right, so let's address this. So somebody has been pretending to be me on Telegram. I am not on Telegram currently, and somebody had brought this to me previously, and the person did get scared off. The guy got scared off, and he took off the Telegram account after I had a conversation with him, but looks like he may be back again. So please, I do not have Telegram. Please don't buy anything from anyone that does not go through the website. So the only real place where I sell anything, I will not ask you to send me an e-transfer. I will not ask you to send me a payment in Bitcoin. None of that. All the business is above board, so it will go through the website. So only way you want to send me a payment for any of the services I provide will be through the website. So if somebody's asking you to send a payment otherwise, that's not me. So please bear that in mind. All right, so that is it. So actually another question. I know, Jack, that person should be charged. Like there's no reason to be scamming people. I'm providing a service. Somebody wants it, welcome. If not, then it's okay. So, but there's no room to be scamming people for no reason. I totally agree with you. And then question, I see you use weekly time frame for analysis rather than daily. Is there any particular reason? Salvatore, I start with the weekly at the beginning of the week. So every Sunday, we just do an overview of the upcoming week. Now, markets are dynamic and things will change. So I do a daily analysis as well. So every evening on the The daily analysis is live only for the people who are in the Turning Pro Challenge or Trade Vault, but I do post a video of so generally the US dollar crosses and the stock market, and the rest is free. I post it on the YouTube, but if you want to do the other like Swiss franc crosses, yen crosses, and things like that, you may want to look at the Trade Vault service, where I go through over 20, like all these pairs plus some more on a daily basis. So we do daily analysis. I also send out a spreadsheet. If you, so that spreadsheet will have all the target levels and stuff like that on a daily basis to all the Trade Vault members. And of course, you have access to the Facebook group. You can ask questions and so forth in the Facebook group. So that service is called the Trade Vault service, and you can check it out at tradingwithvenus.com. All right, so that's it, you guys. Have a wonderful week here, and I will see you next time on Monday. Bye for now.